market sentiment is 65%, as you noted, and I think that's a plausible number. At the beginning of the new economic team, which was around June, we had a forecast about 70% for year-end 2023, but a more aggressive central bank and the decline in energy prices, together with a relatively milder depreciation in Turkish lira, led to this downward revision. Although 65% is still high, but it is not as high as what we thought at the beginning of the period after the elections in Turkey.
We've seen the central bank drastically raising interest rates in December, bringing to 42.5%, marking the 7th hike in a row. This is in a bid to counter inflation, forecast to peak more than 70% in May. What kind of reading do you have in terms of the terminal inflation rate?
At this point, our year-end inflation forecast with my colleagues from Koc University is around 50%. And what we think is that there's going to be a peak around 75% by the mid-year. But then afterwards, the cumulative impact of central banks' rate hikes, together with some base effects, will likely bring the inflation down to more reasonable levels. Central banks' forecast for year-end is 36%. But I don't think, despite all the aggressive hikes that we have seen so far, it's going to be sufficient to bring inflation down to 36%, because our starting point was a very overheated economy, and the consequent tightening is probably not going to be sufficient to lower inflation down to 36%.
There was a hike to the minimum monthly salary, which went into effect on January the 1st, bringing to about 17,000 lira. That's a $578 US. What is the impact here on inflation, and do you expect this minimum wage to be increased again this year?
Yes, I do. In the past couple of years, we have seen real wage adjustments kind of above the inflation rate. And because we are expecting the inflation rate to keep going in the first half of the year, I think a second real wage adjustment will be needed to keep the purchasing power intact in real terms. So all in all, I think there are still going to be three components of inflation in the Turkish economy. The demand inflation, despite central bank's tightening cycle, is still alive, because, like I said, we started with an overheated economy. Even though in the third quarter, in real terms, we have seen a decline in consumption, the demand is still well and alive in Turkey. In addition, there's inertia, because in the period after 2021, we have seen a very fast and unanticipated increase in inflation from 20% all the way to 80%. So it's now engraved in expectations. And even though we now have a more hawkish central bank, in the past, people have seen central bank governors being sacked. So there are still question marks about the sustainability of these policies. And on top of this, we have the minimum wage increase that we have seen at the beginning of the year, which might further start a wage price spiral, which is unfortunately unavoidable, and add a couple of points to year-end inflation forecasts.